So last year I invested in Nvidia, then AI boomed with ChatGPT and all, and I made a very good amount of profit. But wait, I'm not like an analyst who would know what support levels are, and I'm definitely not a person who would stock trade. This kind of sounds like an advertisement. Okay, let me try this. So I'm a person who likes to read a lot, stories of entrepreneurs like Steve Jobs or the founder of Nike and so on. And I make a certain amount of money per month like you. Instead of putting it in a bank account though, I put it in an investment account for companies that I believe are going to be a part of the future. But before I started investing, I did two things. I created a very big Google sheet of all the companies that I know and again, that I believe are going to be part of the future. And I gathered a lot of data about these companies. Then I followed the investment portfolios of people who know what they're doing, like Warren Buffett, for example. After that, I started to make money each month. Let's say I made $2,000 in a certain month. I would take $500 and just put it in this investment portfolio. I did that ever since March of 2022, and my total investments were around 21,973. So here's what I'll do in this video. I'll show you my big Google sheet and what I thought was right at that time. And then I'll show you my investment returns, the roller coaster of investment returns, and how I performed over the years. So this is my Google sheet. At the beginning, I didn't really think of the word stock as, when you hear the word stock, you always think of going up, going down, market, people, analysts, and everything. I forgot about everything around that. What I remembered is that these companies are just companies. A restaurant is just a restaurant, at the end of the day, and they are serving food. So it's the same thing. I looked at their main products, and then I started doing the math. Now, the first thing I did was I looked at their stock pricing for the previous, ever since 2005, in some companies not, because I also want to know whether there is something that is very overpriced, that a stock of a company that is a restaurant, for example, went from 100 to 800. That means it probably is overpriced and it was hyped. And I don't want to buy something that is hyped. I want to make sure that even though I believe in this company, that its stock will probably go up according to data. Like if it's all green all the time, that's good. If it's all red, that's not good. And I'm also looking at good returns. So that's what I was thinking. So I started by companies in the industries, in the tech industry, because this is where I worked in. And I put people like companies that I knew, like Google, like Apple. And then I went to the automotive industry because I believe it's also a very important part of our lives, like Ford, Tesla, GM, and some investment funds like Berkshire because I've read Warren Buffett's book, Johnson & Johnson in the medical field, Microsoft in the tech. And whenever I think of a company that is vital, that I believe is vital, I just add it. It actually doesn't matter which companies you add, as long as you personally believe in their products. So then I started putting their stock pricing on Google Sheet and their performance over the years and their increase in pricing. One thing that made me think of Tesla, not investing in Tesla at the beginning, is this exact number. You can see that their stock went over 708%. I don't know if this number is exactly accurate because their stock divided and it changed, but it was a crazy amount of percentage that when I looked at it, I was like, it's not like the average, so maybe it's going to decrease over the years. I don't know. I'm not a stock analyst, so I would rather stay away from it. But like if I look at Google stock, it's been increasing ever since 2005 on average, and Google is working in tech products that we all use. I can't imagine people using search in a place that is not Google. You know what I mean? So these thoughts, what I was thinking of, is the initial thought of how I build this sheet. But that's not enough. So I went in to define the industries of the companies. Some of them I just said internet or tech, automotive, fund, health, consumer goods, hospitality, insurance, many. I wanted to diversify as much as possible. And space. Space is one of the companies that I believe in and I invested in, but it didn't return me as much as I wanted to. So let's go move forward. There's buy, there's dividends. A good idea, because I've seen a lot of videos online about dividends stocks or stocks that give you a certain amount of percentage every year. This was not the primary objective of this portfolio because I didn't want to look, at the end of the day, I'm not putting $1 million or $10 million and looking at an investment of dividends. So this small percentage, even though it's going to accumulate in time, was not the thing I was looking for. I was looking to make an educated decision about the companies that are part of the future. Doesn't matter if they're going to give me 2% a year, but it's not a bad idea to put this in consideration. And then I started allocating my portfolio percentage based on the people like Warren Buffett and so on. You could just Google Warren Buffett investment portfolio and you're going to see that they invest a lot in Apple, for example. And for that reason, I started allocating my own portfolio percentage. This is where investors are different. Some, like Cathie Wood, would invest a lot in Coinbase, others would not do that. So this is my own formula, but it is based on the people who are like Warren Buffett and so on. And then I would just put, like, if I'm putting $3,000 this month in stocks, I would just multiply it by the portfolio percentage so that I would know what is how much should I buy on the app itself of the stocks. And the rest are not really that important because it's just more analysis of what happened or what is happening. And this is just an estimate. I just estimated if my portfolio improves accordingly from then to then, how much money would I be making? It's all further analysis, but you know what they say, too much planning is not really good. This made me look at all the companies that I was interested in, and according to the numbers of their stocks and this whole image, decide on which stocks to actually put money in. And from there, I just moved on forward to just doing a dollar cost averaging or investing each month a certain amount that I could and put it in this investment portfolio for over a year. All right, so my investment portfolio, it went all the way down to from 21,973 to 19,1,060, or like it had above 10% or 12% return in the negative. So I lost more than 12% at a certain time. And I remember taking a screenshot of this and saying that, you know what, one day it's going to be positive. So don't worry about it and just keep doing what you're doing. I put a certain amount of money every once in a while. So maybe twice a year, thrice a year, based on what I am capable of at that month. eToro, this is the company I use. You could use anything you want. It started a little bit before that, but I can't really access much more than 12 months somehow in their dashboard, which is a little bit annoying. But I started in March of 2022 and I put maybe 4,000 and then another 4,000 later. And then every black dot you see here is just an input. So I just put 1,741, which doesn't make any sense. You know, why 1,714? It's because what I could at that moment was like, yeah, well, might as well put those amount. And so on 3,000, 2,900, and then another 2,300, they accumulate over time and they reach 21,973. At the moment, as you can see, the profit is 14.4% or 3,165. Quite a decent amount. I'm very happy with it and it should increase over time. I'm not looking to a certain threshold where I would stop the loss. This is kind of my savings, one of my savings accounts where I would just put money and see how it performs over the years. But let's take a look at the portfolio of the companies itself that I have. There used to be a pie chart here. Yeah, there it is. So all of it is in stocks, not crypto, nothing. And most of my investment portfolio is in Google because when I did my analysis in my sheet, I noticed that it has dropped massively. The stock price of Google has dropped massively. And it just makes sense that why would this is one of the lessons that Warren Buffett and Benjamin Graham say in their books, that if a company is performing very well normally, but they have a drop in stocks, that means the public has a different opinion of them at the moment, and that this is going to change because a company's financial performance or a company's performance is what manages the company in the long term in terms of valuation. So I invested in Google most of my portfolio, around 31.69%. Then another of it is Apple because they're very similar to it. It's a little bit less, I would expect less of a return. And I think it's true. They had a bit of a less return for me. We're going to check that out in a minute. And then part of it was in Amazon, and then another was in Nvidia, and then Adobe, and many other companies that I mentioned already. Now you would see my exposure of companies, and they're all mostly in different industries. A lot of them are in tech, and mostly in tech. So Google, Apple are in tech. Apple, you can consider Apple in tech as well. Amazon, Nvidia, Adobe, Next Energy, this is in energy. They're different, and that's in the medical field. They're different industries. And then let's take a look at the portfolio itself and its returns. So you can see from let's look at the profit and losses. Nvidia is the one that got me the rest because it was just overhyped recently and the stock jumped a huge percentage in just a very short amount of time from 388 as you can see, actually from around 300 to 380, just because they believed in AI or something around that. And if we go back a little bit to the portfolio itself, as you can see, this is the most returns in terms of percentage. And then there's Spotify, because also I believe it's part of the music industry right now that people can't really let go of that easily. And then there's Google. That was my biggest and then my most important percentage, which is 30% of my portfolio, was allocated there. And this is proven to be a good investment because it returns over $1,500 because it had a lot. Of course, if I'd known that Nvidia would return 106%, I would have put more money in that, but nobody knows that. Plus, Nvidia was more of a gamble. I mean, it's not really a gamble, but it's not as clear to see as much as Google. Then there is Microsoft, also because of the whole ChatGPT fiasco. And Microsoft was actually one of the things that I was a little bit hesitated to invest in, because they kind of sound like the main competitor to Google, and the more they grow, the more Google grows. But when I look at the less Google, like they're inversely proportional. But when I looked at their stock performances, they're both growing over the years. So there's no reason why one would dominate the other and destroy, except if it's very long term. Apple returned a very decent amount. But let's look at the profits and losses in terms of cash. In terms of cash, the main thing is Google, then Nvidia, then Apple, then Amazon. And I have a lot of not good investments, like Beyond Meat, because I'm vegetarian, so I kind of added a personal touch to it. But I'm very aware that I should never involve my personal aspects in investments, and that's why I only invested $90 in it. It's a very small percentage of my portfolio, but it had a very bad return. Similarly, I invested someday $440 in Tesla because I read the book and I believe that they are up to something good in the future. But it's not a big gamble for me, or it's not a big investment for me, because their stock is very overhyped, as I said, and this is something that I will be looking at in 5 years or in 4 years, not right now. Alternatively, Johnson returned 9. Johnson always jumps and goes back. So it went up to 8%, then down to negative 9%, and so on. And I consider Johnson to be more of a dividend stock. It would return some dividends. I think they have a dividend yield of some sort. If we look at their stats, yeah, they have a dividend of around 3%, which is quite decent. So this is one of the reasons why I invested in Johnson, and because it's in the healthcare industry, but I don't expect it to go so high or so low. Next, energy. For the energy, same exact thing. It went up to 15 or 12% and went down to 6% now. IBM, similar. So these stocks, I just put them to kind of make my portfolio a little bit stable. And then there are all the other investments that are just increasing it in profit and that are for the future. So that's overall my investment portfolio. Also, when I used eToro, I kind of listened to what people are saying. Like if we look at Google, for example, a lot of analysts on this app, but you can find other websites like Motley Fools, I think, or whatever, and you'll find what they say. So there are analysts here that would tell you have to buy 95%. It's a strong buy, and by a good 22 analysts offering recommendations. It doesn't mean anything, of course, because the day Google screws up, you'll find that their stock drops. But we're talking over the next 12 months. These are the price targets. So it's good to also have reassurance in terms of that matter. That's everything that I invested in. That's how my stock portfolio works. One of the books that I read was called The Intelligent Investor by Benjamin Graham. This guy is the mentor of Warren Buffett. It's quite a good book, but what I learned from it is one particular thing, which is to be patient and not care about the market as much as possible. Honestly, it made me very nervous looking at an investment portfolio of mine and finding that I have a minus 12.8% or a loss of more than $3,000. It just made me feel nervous. But this book taught me to not care for a second, because good days always follow, and they did. The thing is, I'm not betting on a market because I just believe in those companies. I believe that Apple is going to build an Apple car and be part of the future, and that's why I'm investing in them. But at the end of the day, if you're interested in investing in stocks, I really recommend that you would find a financial analyst to guide you through the process, because this is not financial advice at the end of the day. And if you want to do it, you have to do it right. This is just a guide of how my story was. So let me recap this video for you. It's actually for the short. I invested in Nvidia last year because I believed AI will be part of the future. Then ChatGPT launched and Google freaked out and launched their own Bard. But most importantly, Nvidia became a very valuable company, specifically because of their research and work on AI. This simple thought, which was actually very logical last year, made me a return of around 106% or $900. But let me tell you the thing. The truth is, I didn't only invest in Nvidia. I had a huge Google sheet of companies that I believe that are going to be part of the future, like Google, Apple, Tesla, and so on. So my total investment returns were around 14.4%, or more than $3,000. It's still a good amount of money. I could use it to buy something nice for my girlfriend, or invest in more stocks. So what do you think of my approach? Let me know in the comments. It'll be fun. Aside from that, have a wonderful day.